such and famous day. On YouTube.
Hello, good morning. I just got this message from somebody on the comment section on my YouTube channel, and I wanted to address it. So let's just pull up this comment real quick here. And it is about the VIX term structure, and they're asking about it. And the question is, or the comment is something like this. Hey Dave, love the channel. I'm a little confused when looking at the VIX term structure. What strike price are the futures prices shown for? Sorry if the question seems a little bit too basic. Here's the question right here. So let's talk about that really quickly. Where does the VIX term structure come from? We can pull a representation of the term structure up right here if we go to VIX Central. And if I get out of the way, look, my hair's all over the place. Isn't that beautiful? Go down, hair. Stay. All right. How about this? No, not that. This. There we go. Now my hair looks much better when you can't see it. All right. So where does this VIX term structure come from? We pull up this chart. What does it mean? Where does it come from? Well, first of all, what is it? Okay, well, what this is we're taking prices of different financial products and we're putting them all in a chart. So each one of these dots represents a different financial thing that trades, a different future. And where do they get the prices for these futures? Well, in general, they represent different price levels for options in the S&P 500. The S&P 500 is the most traded thing in the world. In fact, 80% of all the stock market trading and market trading in the world comes through some way or another, comes through the S&P 500. And what the term structure shows us is it shows us the price level in options in the S&P 500 30 days out in general. The VIX itself is supposed to be 30 days out. The futures represent different expirations. And although the VIX is 30 days out, any future each day, a future has an expiration date. So a future could be 30 days out, but then the next day it's only 29 days out, and the next day it's only 28 days out. So each of these futures starts like a year out or something, but the only ones we're really concerned with are the ones that are the most close to expiring. So, for example, right now the May future is closest to expiring, and after that is the June future. And when we look at the term structure, we are looking at the relationship between these futures. So, is May higher than June? And where are these futures in relation to the VIX? But where do these prices actually come from? Well, I'm going to show you. What I'm pulling up here is an options screen for the S&P 500. Now, just to give you a little background on me, I was a professional trader at the Chicago Board Options Exchange. I stood there in the trading pit and traded options for many years. And I am one of the only, if not the only, traders on YouTube who actually, I show my profit and loss statement. You can see how much money is in my account. It's up there on the left side of the screen. And you can see any trades I do every day are published. And you can track my trading if you'd like to and see all my trades. So if I lose money or if I make it, you can see right here what I did, which I think is interesting for people. So anyways, let's get back to this stuff. So if I pull up the SPX and I go to the options screen, it's going to show on the right side here, and it's like pulling up data right now. If we look on the right side here and we go out, okay, so each one of these lines here is a different time period for options in the S&P 500. So this top line here, we can see it says there's that 1 in parentheses. That means there's 1 day until the options expire. Let me make this a little bigger here. we don't even need that stuff right now. Let's get rid of this whole side there. Okay, so you can see up here 1 day till the options expire, 2 days. So if we go out to around 30 days, so that would be out to here like May, that's going to, this level is going to be very similar to the price of the VIX. So if I change the screen again so we can see the whole thing here. If I just actually move up to the other side, we can see the price level of options here is on the right side. So if we look here and we go down to May, I still haven't sized this right. Stay with me just 1 second here. Fit to screen. Okay. If we go to the right side here and we look over to around that 30-day mark here to May, we're going to see it says 30.34 here for the number, right? That is going to correspond almost exactly to the VIX number. And if we look at futures, if we go out to expiration for a specific future, so for example, let's go back to our VIX central chart here. Okay, if we go out, let's say we look out to the July future. If I highlight this, it says July futures expires on July 21st. That's my birthday. Wow. Well, if we go back to our SPX options here and we find one that's as the closest one to July 21st expiration. So let's see, June, July, here's July 17th. So that's pretty close. And if we look over here, it says, what does it say for volatility price level? It says July 17, 33.76. So then if we go back to our VIX chart here for July, this has 31. So it isn't exact, but it's close to the prices of, and the reason this isn't exact is these trade back and forth every day, but it's going to broadly correspond to the option price level in the S&P 500. Now, what corresponds more exactly to that price level is going to be this flat line that's the VIX here, right? So that's going to correspond almost exactly to the 30-day out option. So if we look at which option is 30 days out here on the screen, and we go, so 29 days out, we're showing 31. And what do we have here for the VIX? So it's 31. So it's within, small range of exactly that option. And the reason why it's slightly different here is because the VIX formula for calculating the option is not exactly the same as the Thinkorswim one. And what I mean by that is like this number on the right side, this represents an average of all of the options in this month. So if we actually pull out this May, that's 30 days out, and if we were to look, see there's all these different options, right? And so it's taking an average. If we were to go and individually look at the price level for these, we would see at the money, it's showing all, this is kind of wacky, this price level, but it's showing at the money 32.74. If you go farther out of the money, it's showing 28. If you're going into deeper puts, there's a skew. So what that means is that these options, as you go to the lower puts, they're going to have a higher price level than the higher calls because it's a skew. But so this number on the side here is just kind of an average, and that's why it's slightly different than the VIX number. But this is where the VIX numbers come from, is a price level in the SPX. Now, the exact formula for the VIX and why this is slightly off is there's a specific formula for which options they sample for the VIX, and that formula is kind of like secret. It's kind of like I don't know. Have you studied at all your credit score? Credit scores are based. There's a company called Fair Isaac Corporation that produces FICO scores, and they have several different versions of what your credit score is, and we can kind of extrapolate where it comes from. How much percentage of your credit you're using, how many inquiries are on your account recently, all this sort of thing. How many late payments, 30 days past due payments, etc. But the actual formulas for a FICO score is a proprietary secret formula that's proprietary to the Fair Isaac Corporation FICO. Well, the same thing with the VIX. The actual formula is not known, but we can extrapolate and we can get very close to it by just looking at the 30-day volatility for S&P 500 options. So that's where these numbers come from. So to the question, is this an actual strike? It's actually a future that trade. These are actually futures that trade, and there is no direct arbitrage to bring these futures into line with the VIX. So, for example, if you have the S&P 500 and you have the term structure for that, well, if the futures move away from the spot price, you could, let's say the futures are lower than the index. Well, you could buy a future and you could take a little bit of each stock in the index and sell that. And as you bought and sold those too, you would make money. So what happens with the S&P is that the term structure, it always comes right back into line, because as soon as it goes out of line, somebody takes that opportunity to make that little bit of money that brings it back into line. Well, with the VIX, there's no direct arbitrage, so that these futures can bounce around. So although we know kind of where they should be in relation to the S&P, they will vary slightly, but we do know that that's where they come from, is options in the SPX. So hope that kind of gives you a little information as to where this stuff comes from. I love teaching people about this stuff, and if I can teach one person a day a little bit about the VIX, then it's a successful day for me. In the meantime here, we are looking forward to possibly coming out of backwardation today. And what does that mean? Well, let's just look at our chart really quickly one more time. All we need to come out of backwardation today is for the May future to close below the price of the June future. So if I get out of the way one more second here. Okay, all we need is for this May future right now, which is, what does it say it is right now? 32.85. The June future is 32.57, right? So that's 28 cents difference, right? So if it was 55, it would be 30 cents difference. So 28 cents difference between May and June. We have been in backwardation for a record level. We're in the top 3 all-time length of backwardation. So it will be huge when we close out of backwardation. That will mean that it's a real milestone in this whole pandemic thing to do with the market. For the VIX futures curve to go back into contango means that it kind of means that we're coming off the spike. So although it doesn't have any real significant effects on your position when we, that exact moment we come out of backwardation, it's not like as soon as that moment hits, all of a sudden, all this money flows into your account or something. But it still is a huge milestone for us when we come out of backwardation and into contango. And it looks like it could happen today. When we look at the chart here, we see that the VIX is lower than 3 of the futures now. And we can see at the bottom of the chart, contango down to less than 1%, backwardation down to less than 1%. And we could come out today. So this is an exciting moment in time for the VIX. Best of luck to everybody. Just to give you the quick update on my positions, I am still, I have butterflies on SVXY that make me long. So basically, I'm short VXX and I'm long SVXY are my positions right now. As far as deltas, VXX, if I pull up the deltas for my position there, you can see down here, I'm short 90 deltas in VXX. So that means each dollar goes down, I make $90. Each dollar goes up, I lose $90. SVXY, if I pull up that one, my delta right now shows long 500. So that would mean each dollar goes up, I make 500. But the prices on this butterfly I've been trading, they're very illiquid. So if we look at some of the option prices, the one call that I own, the market was 126 at 257. It went out yesterday. The other one I'm short. The market was zero bid at 126. So these prices bounce around a lot. So I don't really, right now it shows a certain P&L, but it bounces around. So it showed me yesterday, it had me making 5,000, or 2 days ago had me making 5,000. Today it had me losing 5,000. I know that essentially it's a long-term position. So as this moves up, I make money. So it's a good day today as SVXY is up about 50 cents. And we've got about 5 minutes till the market opens now. Best of luck to you in your trading today. Please leave any questions below the video, and I'll try to answer your own question in the same way that I answered this person. So thanks for watching. Best of luck trading today, and I'll see you next time.
You're watching Famous Dave on YouTube.
Hey, Tom. Hey, Spencer. See you guys later.